Good morning, good afternoon, good evening around the world. My name is Doug Brunke. I'm the founder and CEO of Global Chamber, and I'm really pleased to have a really important conversation to get us set for 2022 on the tax and accounting side, focus in on the US. This is a really hard topic for us to chat about often because the tax and accounting people are so busy. And especially with COVID, the last 22 months, they've been particularly busy. So having experts come in to talk to us about this critically important topic at a time when there are so many changes has been really hard. And so we're really lucky to have Cosentus as a member because they volunteered to give this information to us with a couple experts that I'm going to be introducing right now that are going to give you what you need to, for the U.S. tax situation so that you are prepared. So whether it's live here today or more likely sometime during the holidays or maybe as the year begins and you're thinking tax and accounting, maybe I should really be prepared. Ideally, you're going to see this before the 31st, but if not, that's okay as well. At least you're going to have it and you're going to be better prepared to have a successful tax season with the friends from Cosentus. So I'd like to first introduce Emily. Emily Reynolds is a Montana gal, or at least she is now, and she does a lot of really great work at helping companies land in the United States. You wouldn't think of Montana as necessarily a place where there's a lot of international expertise, but it resides in Emily and her team there. They do amazing work getting companies prepared for landing in the US and then ongoing basis to be successful as they grow. Emily, we really appreciate all that you do. And now with the new connection you have with Cosentus, you're even more dangerous in a good way than before. So congratulations on that, and I'll turn it over to you. We look forward to learning more.
Yes, thank you so much, Doug. I'm going to get this presentation kicked off for us. Just make a few introductions so that we can get going on all of these exciting topics. My colleague William and I want to thank you guys all for joining us today for this tax and accounting webinar. We're really excited to cover some of these really important topics for you, including major changes that have occurred for tax and accounting in 2021 that business owners in the US need to be aware of when filing business or individual taxes. This goes for new and existing businesses in the United States, both of which our organization can support should you need it. I'll take you now just a brief look at today's agenda. The global services team at Cosentus that focuses on accounting and tax support. I want to do a brief introduction of that, a look at Cosentus, talk through a little bit of our accounting and tax services, and then William will take it away with these different topics we're going to cover for you. So just to look at who we have with you today. The global services team that focuses on accounting and tax include myself, Andrew Miller, and William Cow. I'm Emily Reynolds, and I lead our global services team that's focused on supporting companies expanding into the US. That includes advisement on any back office hassles you might be dealing with, whether that's setting up your US entity, marketing, recruiting, payroll, tax, IT. I'm really here to just understand your goals and to present you with a route to market or solution for your current situation. Andrew, who isn't with us today, oversees both our tax and accounting teams. And then William, who's going to be presenting to you, is the Assistant Director of Tax Services. William heads up our international tax support and oversees all the work done for our US clients that have foreign ownership. Just a brief look at Cosentus as a whole. We've been in business since 1996, supporting companies expanding into the US or simply continuing to grow their business throughout the nation. We support over 2,000 clients. We have roughly 600 employees globally, all with the goal of supporting our US-based clients. Just a short look at the accounting side. We assist our clients with as much or as little accounting expertise as they might need. Some just need AR support, some need financial reviews, and some need the entire accounting function taken care of from professionals in the US that are experts in GAAP standards and have a team of experts behind them supporting them. As I'm sure you figured out by this point, even though your chart of accounts aren't filed anywhere formally in the US, it's imperative to have accurate accounts so you can make concrete financial decisions, have a clean look at your US operations, and to get your tax returns done correctly and on time each year. Separately, we have a full tax team made of experts that can take care of really anything tax related for our clients, including things like income tax, Secretary of State filings, sales tax, and anything in between. A foreign-owned US company can have more hoops to jump through than a US-owned US company, and our tax teams specialize in those types of forms and filings needed for that more complex structure. As you continue to grow, they can advise you on when you need to register in new states, pay tax in new states, or they can give you the tax advice you need as you expand your employee base or offices through the US. And without further ado, I will let William take the reins here and walk you through all of these different tax considerations you're curious about for this 2021 tax year. We'll look forward to answering any questions you have once William concludes on these topics shortly. Thank you again for joining us. And William, I'll let you kick it off from here.
All right, thank you, Emily. If you could go to next slide, please. Yeah, there has been tons of tax updates, starting with the TCJA in 2017, then the CARES Act, due to the COVID. Today, I want to present to you most of the important tax updates, which gonna affect your business or yourself personally. So let's start first with something called Employee Retention Credit. This is the act enacted in March 2020 by the CARES Act. And the American Rescue Plan Act of 2021 extended this provision through September 30th of 2021, which is a great news. So to qualify for this credit, you must meet the definition of an eligible employer, which basically have two standards. One is your business was partially or fully suspended due to the government order, or if your gross receipt has meet certain reduction due to the COVID. So for 2021, you can basically claim a credit equal to 70% of qualified wages, up to a maximum of $10,000 wages per employee per quarter. So that means for 2021, you are going to be qualified for 3 quarters, and the maximum credit you are able to get for one employee, that's going to be $21,000 for 2021 calendar year. So assuming you have 50 employees qualify this credit, you are going to have at least 1 million ERC credit. At the same time, if you are able to use those wages to claim for those credits, for example, if your ERC credit is $100,000, you have to reduce the same amount from the payroll expense. Let's say your payroll expense is $500,000 and your ERC is $100,000. So your payroll deduction is going to be the difference, which is going to be $400,000. So how to claim that credit? The credit is to be claimed through the payroll tax return, which is Form 941. But by this time, the Q3 payroll return should have been filed already. So in order to claim the ERC credit in 2021, the client then need to file a amended Form 941, which is going to be the Form 941X, in order to claim the ERC credit in 2021. Next slide, please. Next, net operating losses. So this is originally the TCJA in 2017 determined that the NOL could not be carried back. It can only be carried forward with limitation up to 80% of the taxpayer's taxable income. But the CARES Act provided a 5-year carryback for NOL incurred in 2018 through 2020. And the 80% taxable income limitation for 2018 and the 2020 taxable year is suspended. This is going to be a great benefit for employers who have experienced taxable loss from 2018 to 2020, because based on the TCJA, you cannot carry back, but because of the CARES Act, you are able to carry back. And even better, if you have a taxable income in 2018 and you have a tax loss, let's say in 2020, you are able to carry back the 2020 taxable loss back to 2018 without any taxable income limitation. So that is a great benefit, but it only applies through year 2018 and 2020 due to the CARES Act. So beginning after December 31st, 2020, the business that incurs NOL will only be allowed to carry the loss to be used in future tax year without ending date. So you basically means you can carry the loss forward permanently, but the NOL deduction is going to limit it to 80% of the taxpayer's taxable income, which is again agrees to the TCJA provision. Next slide, please. Research and development cost. As many business owner knows that if you take on any research and or development activities, you are able to either deduct the research and the development cost, or you can take the research and the development credit, but you are not able to take both. You can pick either one of those. So the tax update is about research and the development cost. Traditionally, you can deduct immediately the R&D cost if you want to, but for all tax years beginning after December 31st, 2021, R&D costs must be capitalized and amortized. So for R&D costs incurred in US, it's going to have an amortization period of 5 years. And for R&D costs incurred outside of US, it's going to have an amortization period of 15 years. But luckily, the budget reconciliation bill is going to delay the effective date for the R&D capitalization rule until after December 31st, 2025. That means the taxpayer, if they choose R&D cost deduction instead of R&D credit, they still able to deduct all the R&D costs in the current year instead of doing this capitalization and amortization within 5 years or 15 years, depending on where the R&D cost was incurred. Next slide, please. Section 163G. This is a section regarding the business interest expense limitation. This used to be a very complicated calculation for C Corp, mostly, and the TCJA in 2017 has very much simplified this calculation, and basically the rules, how you do the calculation is depend on a key factor called ATI, which is adjusted taxable income. For taxable year beginning before 2022, the ATI is going to include an add back of your interest, taxes, depreciation, and amortization, known to many business owners as EBITDA. So if the ATI is larger, then clearly you can have more business interest expense deduction. But if the ATI becomes smaller, then you have a smaller business interest expense deduction limitation. So for taxable years beginning after 2021, the ATI includes add backs of interest and taxes, but not depreciation and amortization, which will potentially reduce the taxpayer's interest expense deduction, therefore increase the tax liabilities for taxpayers. So be aware. Next slide, please. Okay, next I'm gonna, so the prior discussion is mainly focused on the business side, and next we are gonna focus mainly on the individual side. Next slide, please. So charitable contribution deduction, this is something does not exist before the TCJA or even with the TCJA. You know, with the TCJA in 2017, for taxpayers, the IRS has limited the state income tax deduction to $10,000. This includes your property tax payment, your state income tax payment. So as a result, most taxpayers who used to take itemized deduction, they have no choice but to take a standardized deduction. And in that case, if they make any cash contribution or non-cash contribution, if they take standard deduction, there's gonna be no deduction for the charitable contribution. But CARES Act provides some relief as for the charitable contribution. So for 2021 taxable year, an individual who doesn't itemize deduction, meaning we are gonna take the standard deduction, may take an above the line qualified charitable contribution of up to $300 in cash contribution. And if they filed married filed jointly, they are able to claim up to $600. For 2020, the deduction is gonna be $300, no matter if single or married filed jointly status. So 2021, you have a better chance to claim $600 deduction if you take the standard deduction in your tax return. But there is limitations. First of all, the donations must be in cash. That means any non-cash contribution that does not qualify. And it must be to a public charity. Any private charity, it doesn't qualify. Next slide, please. Increase the limit for cash contribution. So this is basically, you know, for any cash contribution deduction. Traditionally, the limitation is for personal that's limited to 60% of their AGI, and for business that's limited to 10% of their taxable income. But the CARES Act has increased the limitation for personal that's 100% of their AGI, for business that's 25% of their AGI. And this also going to apply for any contribution made in 2021. Next slide, please. Required minimum distribution. So this is mostly related to the individual retirement account. So traditionally, the minimum required ages for the required minimum distribution, we call it RMD, is 70.5 years old. The Security Act increased age at which taxpayers must begin taking the RMD from age 70.5 to age 72, but only for taxpayers who turned age 70.5 after December 31st of 2019. So taxpayers could put off their first RMD until April 1st of the year following the year the taxpayer turns age 72. This is mostly because, for many taxpayers due to COVID, they couldn't travel a lot, so there's no urgent need to use cash. So many, retirement taxpayers, they hope to delay the RMD payments. And also for individuals who are at least 70.5 years old, may exclude from gross income their qualified charitable contributions made directly from the IRA up to 100,000 a year. So this is good news if anyone wants to take money out of their IRA account and contribute to any charitable contribution. So then the distribution is not going to be considered taxable income for that taxpayer. Next slide, please. Qualified medical expense. The Internal Revenue Code Revenue Service issued announcement 2021-7 clarifying that during the COVID, many people purchased some personal protective equipment. This includes mask, hand sanitizer, or sanitizing wipes for the primary purpose, preventing the spread of COVID. Those expenses are deductible medical expense, but they are still going to subject to the limitation, which is 7.5% of their AGI. So if for any taxpayers with a higher taxable income, then I suspect they're still not able to take this deduction because it's very difficult for the medical expense to exceed 7.5% of the AGI. Also, the good news is, the amount you paid for those personal protective equipment, you can pay those out of your medical health account. This includes FSA, MSA, HRA, and most frequently, that's going to be your HSA account, which is a health savings account. But if any payments you made from those accounts, then those are not going to be considered your out-of-pocket medical expense. So that means it's not going to be counted as medical expense to calculate the amount if it exceeds 7.5% of your AGI. But still, you can pay through those accounts, which mostly are tax deferral accounts, so which is good benefit for the taxpayers. Next slide, please. Repayment of deferred Social Security. This is because during the COVID, because of the CARES Act, the taxpayers for self-employed individuals or household employers, they need to pay something called payroll tax, which include the Social Security tax and the Medicare tax. And the CARES Act provided the taxpayers that they are able to defer half of their Social Security taxes for 2020, which is 6.2% of the Social Security tax, right? But they must repay. It's simply just a deferred payment. It's not a cancel of the payment. So they have to repay this amount by December 31st 2021. And the remainder of the amount is going to be by December 31st, 2022. Next slide, please. Excess business losses. This is going to apply to taxpayers with Schedule C, or the taxpayers that has a pass-through business, such as a partnership or an S corp. In the case that a taxpayer is going to receive Schedule K1, right? So they are going to have business income or losses. And in the case that the taxpayer is going to have business losses, they used to be able to, deduct those losses against the taxpayer's non-business income. But since the TCJA of 2017, that deduction amount has been limited. So the indexed limitation amount is 262,000 or 524,000 in the case of a joint return. Net business loss in excess of this amount, meaning your non-business income is in excess of those amounts. For personal, that's 262,000. For joint return, that's 524. So any non-business losses in excess this amount will be disallowed, and it's gonna be carried forward. Well, this is because of the TCJA, which theoretically this should run through beginning before January 1st, 2026, but a provision including a House reconciliation bill would probably make this limitation permanent, which means the taxpayers potentially their business loss potentially gonna be limited to the amount mentioned above permanently. Next slide, please. Alrighty, I think that's all the text updated. Then now I'm turning it back to Emily.
Yeah, so that really covers, I mean, as William can tell you, there's so much that comes into play. It's very situation specific for what industry you're in, what you might be selling, where you're selling it to. We're happy to take any questions here. We're also happy to take it offline to speak with you, to learn about your particular situation, whether you're selling through your foreign entity in the US, you're expanding soon, you're wanting to set up, you need help figuring out what entity structure, what have you. We are here. Please reach out to me at my email, give me a call. And again, we can answer anything here as well, Doug.
Very good. A couple questions. And either to both of you, what's your biggest concerns in terms of some of the changes that you're worried about companies missing and not understanding before we get into January?
Yeah, William, I think I would probably direct that over to you. What do you think about that?
Yeah, that the simple, most important thing I think the business shouldn't be missing is the ERC, because that's really a huge provision. That's a huge benefit that the business does want to miss. The good news is that the statute of limitation for any ERC before Q2 2021, that the statute of limitation of filing that is 3 years. So the business will have 3 years of time frame to get that filed, and so to get the refund by filing the Form 941X. And for Q3 and Q4 of 2021, that statute of limitation is 5 years. So the business will have 5 years to get it filed. So if any business is interested to see if they are qualified for the ERC. They are feel free to come to us, and we can do a assessment, initial assessment to see if the business are qualified for the credit, and then we can take the next step to do the calculation to determine how much credit does the business qualify, and hopefully we can get more money back to the business to help with your growth.
And on top of that, Doug, I would just add, and everything I learn from William and the tax team. But one other worrisome element, especially for a newer company that's set up in the US, is just knowing that you do have to file tax returns, even if you haven't done sales yet. We see that a lot. If a company has established an entity, it comes around time for their year end and they don't think they need to file taxes yet because they haven't sold anything, especially if they're foreign owned. It's imperative that they do their taxes because there are special forms that need to be completed that carry hefty IRS fines up to $25,000 just for not completing, even if it's a fairly simple form to do. So I think just knowing that is also very important, especially for a newer business.
I see. That relates to the second question, and that is, you mentioned in your introduction about foreign companies having a higher bar or having additional things. I think you said additional hoops they need to jump through. What are some of those things that you notice that domestic companies don't need to worry about, but that foreign companies do?
Yeah, well, and I'll let William expand on that. I mean, in short, a domestic company typically has some kind of idea of what's required of them, what's typically done, if they expand in a new state, what they need to do. A foreign business owner has no idea when they need to start registering in new states, pay taxes in new states, when do I need to start collecting sales tax? And then, of course, some additional forms that need to be completed showing transactions between the foreign entity, the US company. I'll let William expand there, but it can be a little bit of a minefield only if you don't know what's expected and if you don't have the experts in your corner to support you.
Yeah, that's exactly right. The state registration or even the state filings, it's all involved a lot of concepts which is completely foreign to the foreign business owners, such as the state physical nexus, the state economic nexus. Those are factors for us to determine if the business is supposed to register in those states. And the key difference, on the other hand, this is going to be the same requirements for the US business. But the key difference between the US business and the foreign-owned US business is that there's a form called 5472. That is basically, the over 20% foreign-owned US business. So what this form does is the US company has to file the form 5472 to disclose any transactions between the foreign parent and the US subsidiary, and also any subsidiary belong to the same foreign parent in some other countries or in US. So that form is very important in a few aspects, but the key is there's some concept called transfer pricing. So the penalty for failing to file the form is huge, as Emily mentioned. That's up to $25,000 per form. So let's say if the foreign parent has a subsidiary in Brazil and another subsidiary is a US company, and typically the US company is going to have some transactions with the foreign company, with the foreign parent. For example, importing some inventory from the foreign parent, or meanwhile importing some products from the Brazil subsidiary. So then the US corporation is obligated to report both transactions in two separate Form 5472 by the return deadline. failing to do so, it's going to subject the company, the U.S. company, to this huge IRS penalties, which it does not exist for U.S. company or law. That only applies to foreign-owned U.S. corporations.
I see. So there's quite a number of things, and including penalties. So that's definitely something to know. How do people typically work with you? Could you kind of take a step back and, does Cosentus only do tax and accounting? And do they work with someone like you, Emily, and then you get them into the right people? Tell us, kind of take a little bit of step back, and you're explaining it to your grandmother about what Cosentus is all about. Let us know a little bit more detail, and then how, from a company perspective, should they interact with the firm?
Mm-hmm. Doug, a 30,000-foot view. In short, Cosentus wants to be able to support expanding companies or growing companies in the U.S. with whatever might come up. The main areas that we can provide support: entity formation, banking support, insurance, hiring employees, paying those employees, getting benefits together, tax, accounting, marketing and branding, market research, IT, location strategy for a US-based warehouse or facility of some kind. We want to be able to support you whatever your market entry or growth strategy looks like. Typically I deal with the majority of any client that comes to us that we would consider a global services client, someone expanding into the US or foreign ownership. We like to have a discovery call to get to know you, to learn where you're at, to see what your needs might be, and to see what solutions we might have for you. Working with the Global Chamber, we have so many great resources, so many great partners we work with. So we'll loop in, an appropriate partner if it's not something we can help you with. If it's something we can do for you, we'll get a proposal together. We'll talk through the options. So tax is just a little piece of it, but it's a huge piece. Tax will come into play for any company that starts selling into the US. Even if you're a foreign company selling through Amazon, you still have things to think about. So tax is always a big part of the conversation that we like to have right off the bat. You can reach out on our website. You can reach out to me directly. My email address there. Give me a call. Should it be tax related, I would loop William and the tax team in. If it's in some other area, I'll loop those teams in. We'll see what we can do for them. But truly, Doug, we try to be able to support in whatever it might be, even if it's not something we can take care of directly, although there is a lot in our wheelhouse that's all around administrative, back office support, those things that you don't necessarily get into business to do, but that come along with it.
Who is your normal contact point in these companies?
Typically I end up working with if there's someone focused on US operations, for smaller companies, the CEOs, the COOs, the CFOs, figuring out what to do about tax and accounting, maybe the market manager who's focused towards the US, maybe the sales manager who wants to look at getting a salesperson set up in the US. But typically leadership of some kind that has some kind of decision-making authority, or just someone who's wanting to get together a budget, a plan, a strategy for the US. But yes, we're really flexible, but it's typically a little more simple if it is someone that might have access to numbers or what's been done to date, or just a little of that high-level information so we can really help out a little more.
Okay. I think you probably can help almost anybody, but could you let us know kind of the sweet spot in terms of company size, maybe countries that they're from, languages they speak, market segments that they're involved with, whether they're on the retail side or B2B? Who can you help, and who do you like to help the most?
Mm-hmm. Yeah, we can definitely help businesses of all sizes. I would say the majority of our clients are more maybe a medium-sized business that truly has the budget and has the plan together to make a successful expansion. There are times that smaller companies have come to us and don't really have some of those things figured out, and it's not always the best time. And we'll give you that kind of strategy and advisement if that's something that we're feeling as we're going through the process together. We have helped many small companies come into the US as well, but I would say more of a medium-sized company, 50 plus employees, someone that truly has a budget together for the US. And in terms of industry, it's all over the map, which is probably one of the most fun parts about our job and helping these companies is we get to learn so much about IT products, different kinds of food products, retail products, a great new software solution, some kind of digital marketing solution they're expanding into the US. It's really all over the charts. And in terms of where they're expanding, all over the place, how they're expanding, all different kinds, with salespeople, with a huge warehouse, with partnerships. We've really seen quite a range of the types of companies that come, where they go, what ends up making them successful, which really helps us as we're dealing with new clients, just knowing what types of things can work and do work. So we really see quite the gamut, Doug, but I would say more of a medium-sized company that does have some type of strategy together or an idea of budget or a team that's kind of focused on this and it's not going as much on a whim. When we see someone going a little more on a whim without a plan, without understanding what taxes would look like, what hiring an employee, the US employment taxes, we try to help give them an idea of what that looks like so they can have a realistic expectation of how to get in, what's it going to cost, what does that first year budget look like?
Got it. And how do you handle the companies that have a language? I presume since they're landing in the US, they've got at least one person that speaks English, though.
Yes, you know, when we help, because we do help clients expand from all over. I would say the majority of our clients come from the UK and from Western Europe. We're focused a lot on India and Dubai. We have partners down in Mexico. When it comes to Mexico or Spanish-speaking countries, we do have plenty of Spanish-speaking staff. However, you hit it on the head with if they are going to be selling in the US, working with US clients, working with US partners, having even a team member that speaks English that can communicate with those individuals, sales and customer service and all of those pieces are going to be extremely difficult without that. And so truly, I don't think we would be as successful as a partner if there wasn't someone on their team that spoke English, just because that is the majority of our staff. There isn't a ton we would be able to do with languages outside of Spanish.
I presume William is part of Cosentus, and the way you position things is that you're able to provide help in really every area. So in some cases, it'll become an employee of Cosentus that helps directly, and in some cases, I presume maybe selecting a warehouse, it might not, right? It might be a partner that you recommend that you vetted that is trusted and professional. When, how should we visualize what resources are actually within Cosentus, and then how do you decide to go outside for help?
Mm-hmm. You know, the main resources that we do in-house are things that are going to directly affect the business or the product, things like marketing, IT, accounting, tax. The things that we typically bring partners in for are things that are a little more associated with kind of once the business is set up, once we have these building blocks, what comes next? And so it's kind of the secondary items that we typically try to partner with. So things like finding partners, some kind of partner check, some kind of market research to locate where your customers are. I mean, we're always extremely upfront about that with clients, whether it's a partner, whether it's something we can take care of directly, is it an introduction to a vetted resource of some kind. But the majority of items that we take care of directly are just directly affect the actual business, the books, the things that are going on day to day. And yes, William deals with basically all of our tax global services clients. So he sees all kinds of situations day to day, all kinds of companies in all different places. So yeah, it keeps it very exciting. There's not a lot that we haven't seen, but I guess every day we're meeting new people and learning new things. So it'll probably just be a constant roller coaster of exciting situations.
And you've seen a lot of them. You've been involved with this activity. It says on the website for 8.5 years. Is that a current data point? Has it really been that long, or has it been longer? And then, you've seen a lot of things. How do you see this whole area of supporting companies coming in evolving? How is it different from the way it was in the beginning? And maybe what are some of the views of the future?
Mm-hmm. Yeah, 8.5 years, which is so
Wow.
exciting. That's when we started really this idea of trying to help companies come into the US. We saw that, large corporations have these kinds of teams in-house. They don't really need help doing that, but small and medium-sized companies, they need those resources, and they can't necessarily afford to get all these large organizations to help them. So that's really when we kicked it off. It's been really exciting. It's continued to mold and shape over the last 8.5 years. And I think we've seen just how important it's gotten. When COVID struck and companies were having to really pivot quickly in what they could do, how they could sell, how are they going to stay in business, and finding new revenue streams, quite a few of them turned towards, I wonder if we could try to sell in the US market. Like, can we try to sell online, sell through Amazon? And so we've seen that really it's going to continue to grow. It's going to continue to be a great market to focus on, especially when we do get into these kind of working from home, lockdown type environments, still being able to sell your product online, work with partners, have a little more of a digital presence. I think having partners that you can trust is going to continue to be a really important part of expanding into the US and growing. And so we're just trying to stay on top of all the latest trends, all the latest education, so that we can keep our members, in business through some of these harder times, help them to get back as much as they can on their taxes with these different credits. So yeah, that's really where we're focused. We feel really, really great about where it's going. I don't know, William, if you wanted to expand on that at all, on what you've seen with some of our tax clients.
Well, that, I think you basically told the whole picture. I completely agree.
Sounds good. So I would say, I'm just really happy and pleased that we had this chance today to talk. I think it further shows the capabilities, the experience, the confidence, professionalism that Cosentus has. We have formed the global tribe to connect members to clients. And then in a secondary way, our goal is always to surround them with the people that are going to help them. And they're not going to be, incapable people. They're going to be people that know what they're doing. And we're just so pleased that you guys are part of the chamber. Everything you do just rings confidence and capability and the belief that you're going to be able to help these companies make the most of their situation. You can't guarantee success, just like we can't for a company that's expanding across border. You never know what the product, service, is going to be reacted to by the market, but you can give them the best chance to succeed. And I've seen enough of what you guys do to know that that's what you do with companies coming in. So thank you for all of your work. We just have a couple minutes left. I'm wondering maybe if both of you would like to make any closing comments.
Just from my end, I would like to say thank you so much to you, Doug, and to the Global Chamber. Thanks for letting us put this on. For anyone that ends up watching this later on, we'd love to have a conversation with you. If you, have questions about what your requirements might be, what's coming up. These were really just some of the kind of bigger topics we wanted to cover. There's obviously so much more that comes into play. So please reach out. We can have a short call, give you an idea of how we can support you. And yes, we've enjoyed getting to walk through this. How about you, William?
Yeah, it's a pleasure to be here to present to all the audience. So thanks for listening, and so thanks, Doug, for organizing this great event. Like Emily said, we just so eager to help all the potential clients to come on board to expand your business in the US, and we are here to help. So thank you very much.
Our pleasure. William, you're based out of California, I think, right? Is it in the LA area or which part of the state?
Yeah. In Ventura County in Los Angeles.
Okay, and you end up probably working with companies that are all over the world and also located all across the US. Is that the case?
Yep, that's correct.
Okay, and Emily, you've already been clear about that, right? You're working with people from all over, and they're not typically in Montana, right? They're located in different places.
Yeah, all over the place. I told you we've been working a lot more in India, so it's been really interesting with that 12.5 time hour difference. But our team is really flexible. We want to make it work. We don't want it to make it seem like we're having to try to gather all these people at an odd time. So we can definitely make all the funny time zones work. We've been doing it for a while now. So, and as you know, as you do as well, something we're really comfortable with.
Are there certain companies that you've just really enjoyed working with, where you can point to them and say, wow, I remember when, and now they're quite successful? I'll bet you there's quite a number of them that you're just really proud of and also feel really good about, not only what they've done, but probably what you've done as well in supporting their success.
Yeah, because really, I mean, I stay in touch with just about all of our global services members. We've helped about just under 150 companies into the US in some form or another, whatever that might look like. And I love hearing from them every now and then. We have companies that, we set up back in maybe 2014, 2015 that have come on for really a range of support just because they don't have a ton of people in the US. And it's been really exciting to see how they've grown. We've had so many clients that have won awards, that have got, huge R&D tax credits for the work they're doing, landing a ton of clients, being really successful. We love seeing that. So yeah, there's a lot of really fun ones that I love catching up with, that I'm super proud of, that I still get to hear from all the time. So we want more of that. We want to be able to help more companies that are going to grow and thrive, and let us just get to be a part of it with them.
Yeah, have you guys shared your contact information? And if, either way, whether you have or not, I would say, in the blog posts that we do after this, we'll definitely make sure that they can connect in, because you, Emily, you'd be the key starting point, right?
Yes, definitely. I had that up on the screen. Let me pop that up just one more time. So yes, they can reach out on our website. We have, they can reach out there. They can reach out to me directly. They can give us a call. They can give my cell a call. Really, you can reach out whatever way is most convenient. From there, we'll just talk a little about your business, about where you're at. And from there, we'll just see what kind of solutions we have for you. If we're the best fit, what kinds of things we can support you on, and just take it from there.
Do you ever have clients come up and do fly fishing in Montana during the summer?
Funny enough, we sponsored a Shelby Nichols, who's on this call with us as well. We sponsored a fly fishing event. I think it was maybe in July or August with some of our we have a handful of different dental and medical clients around the US, another service we provide that wouldn't necessarily come into play for a global client coming in, but revenue cycle management for those types of companies. And we did get to take quite a few of them out doing some fly fishing. So yeah, that's always an option. Do a little snowboarding. Lots to do in Montana.
Well, thanks for all you do for international companies, coming into the States, and all you do in general. Have a good holiday. We're going to end the conversation now, but those of you who checked in, thanks for learning a little bit more today. Have a great holiday. Take care, everybody.
Okay, thank you.
All right, thank you.